Good afternoon, everyone. My name is Julie Bell Lindsay, and I am the Executive Director of the Center for Audit Quality. The topic of this panel is the impact of COVID-19 on accounting and auditing matters. So over the course of the next 45 minutes or so, we're going to talk about the continuing impact of COVID-19 on accounting and auditing. We're going to talk about things such as the regulatory and the profession's response to the pandemic, the transition to remote working environment, as well as specific accounting and auditing subject areas that have been impacted. We are going to save about 10 to 12 minutes at the end of the panel for questions, so please feel free to be sending your questions in as we go throughout the panel. We do have a great panel for you today. We have 2 regulators and 2 practicing auditors, and I'm going to have them introduce themselves. So we'll start with Christine.
Thank you, Julie. I'm Christine Davine, and I lead Deloitte's National Office for our audit function.
Thank you. And Duane?
Hey, good afternoon, everybody, and thanks, Julie, and thanks to the CAQ and AAA for inviting me to be with you and my fellow panelists here. I am Duane DesParte. I'm with the PCAOB board. I joined the board in April of 2018. One thing we did want to get out of the way is I will give my usual disclaimer that the views that I express here today are my own views and not necessarily the views of the PCAOB board, any individual board member, or any of the PCAOB staff.
Great. Thanks, Duane. Jim.
Thank you, Julie. And thank you, everyone, for being with us today. I'm Jim Estes. I'm a partner at Ernst & Young, and I'm our vice chairman of professional practice for the Americas.
Thanks, Jim. And Sagar.
Hi. Thanks, everyone, for having us. Looking forward to today's panel, very important group, obviously AAA, and so looking forward to it. My name is Sagar Teotia. I'm the SEC Chief Accountant. I'll also do my disclaimer. These are my words, not the words of any commissioners, the commission, or anybody else in OCA, so I just speak for myself.
Great. Thanks, everyone, and thank you for joining us. We're going to dive right in because we have 60 minutes and we have a lot to cover. And Sagar, the first question, we're going to come to you. The Office of Chief Accountant at the SEC has been very active during the pandemic and really talking about the importance of continued high quality financial reporting during this time. Can you provide some insight as to why that is so important to continue during the pandemic and any additional evolution of the financial reporting ecosystem since your last statement, which I think was towards the end of June 23rd or so?
Sure, Julie, thank you. And so obviously, as folks know, our mission is to protect investors. And so every day we're guided by that mission. Obviously, COVID-19 was a challenge for all of us, is a challenge for all of us. But when you apply kind of our principles of what we do, kind of running it through kind of what's happened with COVID-19, I think if you look at that lens, I think we've been guided by, investor protection, getting high quality information, out to folks. What is our role domestically? What is our role internationally? All of these things we'll talk about. Obviously, we'll spend time talking about the FASB, and Duane will talk about the PCAOB, all central to kind of the overall path and progress on this. From an SEC perspective, we have a COVID-19 webpage. It's actually amazing to see kind of what's on there. And I remember the day it started, and there was nothing on there, right? It just started, and just the fact that we're putting a COVID-19 webpage on is novel enough. And all the different divisions and offices, and we work very closely together to get the full breadth of the building, the thought process of the building. People have different expertises in order for us to be able to provide the best, regulation and get to kind of our core mission. And so, look, I mean, the ecosystem obviously needed to come together and work closely together in this novel time. And I know Duane and Christine and Jim will walk through the different things. And I'd certainly encourage you to listen to their perspectives and kind of, how they, in their different roles, were moving towards this emphasis of high quality financial information. And so, I think the package of information we've been able to get to investors has been extraordinary, given the challenges that people have faced. I think when you sit here and do it in the US, the world's watching. And I think we're mindful of that, and we will continue to engage both domestically and obviously internationally. As those who know OCA well know, is statements are, we do statements when we feel there's a need, right? We don't do them based on, hey, every quarter, every 6 months. It depends on the landscape. It's a feel thing. And Julie, as you pointed out, we've done 2 statements. We wanted to be transparent with what we were seeing, the importance of what we were seeing, the key messages that were out there. We've covered a whole host of things in those statements, a lot of different accounting consultation areas. What were the key areas we were seeing? ICFR, going concern, consultation in general, CARES Act. I mean, the list kind of goes on. And obviously, we'll save the international for later, and we'll save kind of the FASB and the PCAOB side, but those are very substantive parts of that. And I think that strategy, that engagement of what we do in OCA and broadly the SEC, I only see that continuing as we continue here to start thinking about Q3 and then obviously year end. And I think our engagement, our communication, will be informed, and then we'll share what we're seeing, and then we obviously value what others are saying. And so from broadly, Julie, from a communication point of view, that's been our strategy. And then I think the emphasis on the decisions we've made have been guided by our mission, right? Which is, of course, what you would expect, but it's a mission that we think is really, really valuable and important for investors.
Great. Thanks, Sagar. Duane, let's switch to you from the PCAOB perspective, and let's talk about, we're talking about high quality financial reporting. Let's talk about high audit quality, which is obviously something that you all are very focused on. Can you talk about, the implications that you've seen in this environment for your audit oversight responsibilities with the idea of high audit quality?
Yeah, certainly, Julie. Adding on to Sagar's comments, this is really uncharted territory for everybody. And with the significant impacts and uncertainties on operations and financial results for virtually all companies, investors now more than ever are craving and need relevant, reliable, timely financial information. And so high quality auditing as part of that equation to help ensure the relevance and reliability of the information is crucial, obviously. And one of the things that we've been stressing is, despite the economic uncertainties, despite the operational complexities for both issuers and auditors, that auditors still need to make sure that they are fully complying with our auditing standards. I mean, now is really the time for auditors to stand tall and to exercise objectivity, exercise the professional skepticism that are really hallmarks of the profession. And likewise, we as the regulator at the PCAOB, we recognize that our own audit oversight activities also take on added importance in this environment. So we remain fully committed to our work. We too have stepped up, and we've been able to carry on with our core activities, whether that's registration, inspections, standard setting, enforcement. We have taken steps to provide flexibility, realizing there are quite a few stresses on the system. And so flexibility in our activities. As an example, in March, we gave the firms the option to defer for 45 days some or all of our planned inspections. And firms to varying degrees took advantage of that flexibility. We, of course, have also made adjustments to how we're doing our work. So we'll talk more about, the whole remote work environment and carrying out our activities remotely a little bit later, Julie.
Great. Thanks, Duane. Jim, I'll come to you next. I like what Duane just said about the profession standing tall. It's a great way to put it. Can you talk about, given this focus on high quality financial reporting, how has the profession kind of stood up in this environment to really maintain high quality financial reporting during the pandemic?
Absolutely, Julie and Duane, I appreciated your remarks as well. It made me feel even stronger about what I wanted to say now. And I feel like our role is as critical as it's ever been right now to perform high quality audits and really our role in promoting trust and confidence in our capital markets. And so we believe that's extraordinarily important. And as you say, it's time for the profession to be standing tall. I know our people do, and I think I speak for the profession when I say we have a very strong sense of purpose right now, and investor protection and in protecting the capital markets, as we've been talking about. So most certainly the COVID environment has presented new challenges for the profession. We've been working on now for, since before March, really, time frame. New accounting issues. Sagar, you mentioned some of those and some of the statements that you came out with. And most certainly some of the auditing challenges, and particularly in this remote environment, and how to make sure that we are executing with the same high quality in a remote environment. So, one of the ways I think we were also responding as a profession during those early months, we were meeting regularly with the SEC, with the PCAOB, talking about the things that you've mentioned, including the relief that was provided around inspections, and of course our global counterparts as well as this was evolving. And so I feel like the profession is responding very well into a particularly challenging time.
Thanks, Jim. Christine, let's turn to you and let's kind of pivot. We were talking about the profession. Let's talk about public companies, which obviously have been greatly impacted by the pandemic. Undoubtedly, their risk profile has changed. Companies' profiles have changed, and that depends on the industry they're in, their customer base, the supply chain that they're in, and many other different factors. Given that most companies had filed their annual report before COVID kind of hit in earnest, so to speak, what have you seen? What COVID disclosures have you observed in the subsequent 10Qs throughout the rest of the year? Are there any themes that you're seeing?
Yes, happy to address that. And there definitely are some themes. Just first, by way of background, most companies did file on time in Q1 and Q2. The SEC gave the extended period in Q1, which I think was not really largely used, and therefore they deemed it was not necessary to give another extended period. So that was good news that most companies did file on time. And we did do an analysis of the reports that have been filed during COVID. And our belief is that companies really did respond to the SEC's requests for transparent disclosure. So Sagar, you teed up the statements that were made and your COVID website, and those statements have been very helpful. And also the CorpFin, the Division of Corporation Finance, I use SEC lingo by saying CorpFin. So as a former CorpFin alumni, I lapse sometimes, but CorpFin did issue some very helpful disclosure guidance topics, both 9 and 9A. And that provided a really good, I think, a clear framework for evaluating disclosures. So that was a good resource there. One of the common themes that we saw was the pervasiveness, I would call it, of the impact. And it really has virtually impacted every company. Of course, some are positive, and it depends on your industry, but it had a very broad impact. Companies talked about, Julie, you mentioned, they talked about the supply chain. They talked about how it impacted their customer base, manufacturing capabilities, talent models, investment plans, financing structures, their corporate strategy. Those are just to name a few of the, topical areas that we saw companies discuss in their disclosure. I want to briefly hit the areas in periodic reporting and tell you the disclosures we saw. So from financial statements to MD&A to critical accounting estimates to risk factors to internal controls over financial reporting. So in financial statements, again, the vast majority of the S&P 500, our study was really looking at that, did discuss COVID-related matters. The most frequent financial statement note topics were use of estimates was one, where companies talked about the heightened risk of material changes in estimates from COVID. Another area would be subsequent events, clearly, and that's where companies were discussing the latest changes in events from COVID. That was particularly key in Q1, where you only had about 2 weeks, right, of the COVID impact. And then Q2, you've had the entire 3 months of COVID impact. Going concern was another area that was frequent disclosure in the financial statement notes, and that dealing with the increased risk created by substantial doubt in the industries that are most highly impacted, whether it's retail or oil and gas or the most affected industries. MD&A, virtually all companies had COVID disclosure in their MD&A. They talked about the current status, talked about the operating plan, talked about the impact on that particular quarter. Discussion of liquidity. was really key. And I noticed some of the SEC statements focused on that in detail. And I think in Q1, the liquidity discussion may not have been as robust. Again, it was sort of in the infancy of COVID. And after the SEC statements, we saw some good disclosure about future effects of liquidity, more forward-looking disclosures. Critical accounting estimates. So about a quarter of the S&P 500 in Q1 and Q2 had something in their actual critical accounting estimate as it was impacted by COVID. So about 75% of that quarter focused on impairment matters. So that was a very frequent area. And early warning disclosure around those potential impairments was frequently cited in that impairment critical accounting estimates section. I'll move on to risk factors. And in risk factors, again, virtually all companies in the S&P 500 had a risk factor related to COVID matters. Uncertainty was a significant theme that we saw in those risk factors. Discussion of the broad risks and the potential outcomes, discussions of difficulty in forecasting and planning for the future. And then finally, I just want to briefly mention internal controls over financial reporting, an extremely important topic for a remote working environment. And what we saw on the disclosures there were some companies did mention the impact from the transition from working live to working at home on the execution of their controls. So they talked about the impact on the execution of controls and procedures. But I would say in general, companies did not conclude that the changes represented a material change in ICFR. So that was my summation of the disclosure journey that we saw in Q1 and Q2.
That's a great summary, Christine. Thanks very much for sharing that. Sagar, I'm going to come back to you now. Not only has the Office of Chief Accountant been very active in putting out its own statement, but you guys have also been very active in dealing with standard setters, other standard setters, and other regulators, both in the US as well as internationally during this pandemic. Can you talk a little bit about that and why that is so critical?
Yeah, no, happy to. And I think if we don't work well with others around the globe or other domestically, we can't get to where we want to get to in terms of the quality information, the protection of investors. And so it really is very, very key to what we try to do as an SEC and obviously OCA, we play a role in that. And so first off, certainly a big tip of the cap to the PCAOB. They've done an absolutely terrific job. Duane outlined the incredibly sensible approach that's been taken, and then the fulfillment of the mission that is absolutely critical to enhance audit quality and protect audit quality. So certainly just an absolute tip of the cap. We have the privilege of working with the PCAOB on a daily basis and engaging with them and working together. Same thing with the FASB. The FASB was very thoughtful. The FASB's gone through, at June 30th, a transition at the chair level. That's not easy in a non-COVID environment. That's obviously harder in a COVID environment. And the transition has gone well. Full tip of the cap to Kathy Casey and all of the trustees. And then obviously both Russ and Rich. It takes two to obviously do a transition. That's really important to our system, our markets, and all that's going on. That's a very critical, obviously, role. And then obviously we work closely with, Treasury, the Fed, other bank regulators on different matters. Just depends on, what they have. Everything has accounting and auditing implications, and that's where we get involved. So if they're going to do a program, typically we get involved. It's good that we, get involved. We've got a lot of accounting auditing history, and we can kind of work together on different areas. And that's just the domestic platform. And then Julie, to your point, obviously then internationally, we want the highest quality international financial statements, reports. And so we spend a lot of time on IOSCO, on different areas within IOSCO. We spend a lot of time monitoring board and different areas on that side of the house. And so we're fortunate enough to be the vice chair of Committee 1, which is the accounting and auditing disclosure section of IOSCO. And so IOSCO put out a accounting and auditing statement probably about a month and a half ago. We were fortunate to be the vice chair to have influence Obviously, on the international side, there's 70, say, and we're one of 70, but to have that influence is critical. And I think the product that they put out was a terrific message. And to get that on a global message, many of which were the exact same messages that we had here on what we the different panelists are talking through, and to get that on a global level, to get that comparability, the regulators thinking in a similar way is really, really important. Obviously, as investors invest around the globe, and so you're absolutely right, Julie. It's central to what we do, but it's, again, like all of these things, it's been heightened in a COVID world. But that just speaks to the importance of needing those relationships all the time, right? And then when there's something like this, it becomes a lot easier, right? When you've got different touch points with different people, you can really leverage it and so forth. And so we've certainly done that, and it's been terrific to play kind of a role in those different parts. So that's kind of that's why it's important from our lens.
And that's great. And Sagar, I know another area you've been very active is the monitoring group. We'll come back to that in just a minute. But before we do, Duane, I wanted to switch over to you for just a minute. I know we've already talked about some of the communications the PCAOB has had during this time. Any other communications or guidance that you wanted to highlight that the PCAOB has been issuing to auditors and other key stakeholders in this very uncertain environment?
Yeah, I'll just mention a few, Julie. Thank you. And kind of carrying on with Sagar's comments. And I will also give a shout out to Sagar. We've been had a really good relationship with the SEC and getting a lot of good counsel from Sagar and his staff. So we appreciate that. But collaboration and communication is key. And we've taken a number of steps at the PCAOB to kind of foster knowledge sharing and understanding. For one, the board has met with the leadership teams of each of the major US firms to discuss how the firms are looking at the implications on audit risk and what types of things they're doing differently in response to those different risks, including in their QC systems. We hosted a webinar with audit committee members to address the effects of COVID on financial reporting and auditing, and on how the audit committees are overseeing that in this environment. As information, the webinar is available for viewing on the PCAOB website if you're interested. There are several other communications that we have posted on our website. We have a COVID-19 resource center that you can take a look at. One document that I did want to specifically highlight is what we call a spotlight document that we put out in early April. And it really was intended to focus auditors on the key elements of an audit that might warrant additional focus because of COVID. And at the time, it was really intended to be targeted on wrapping up year-end audits, but I think the guidance there applies to audits now and in the future as well in this environment. Again, we emphasize the importance of exercising due professional care and following the standards. We reminded auditors that opinions need to be supported by sufficient appropriate evidence, even though it might be harder to get that evidence in this environment. We also wanted to signal to stakeholders that because of the environment, audits may require more effort and may take more time than usual to complete. So we wanted, as the regulator, to send that message as well. And we underscored the importance of reassessing financial reporting risks, some of which have already been addressed, and adjusting the audit testing and work plans accordingly. So, in addition there, we talked about things like making sure the auditor is considering whether or not they need to have more use of specialists, how they're going to handle supervision and review in a remote work environment, that type of stuff. So, we thought it was important to get that out there as early as we could. I will tell you in one thing I will share, which is my point of view. When we go in and inspect in future periods, I believe we should give favorable consideration in situations where the auditor has exercised appropriate skepticism, when it's based on the facts and circumstances and the evidence that was reasonably available to the issuer and the auditor at that time. But the auditor needs to make sure they're also sufficiently contemporaneously documenting the basis for their judgments. And I think we try to, incorporate all those thoughts into that spotlight, and that's also available on the website. We're going to continue to monitor, Julie, and we'll update as we feel necessary.
That was great, Duane. It's nice to kind of hear some of the thinking behind the statements. It was really helpful. Sagar, I'll come back to you on the monitoring group. You, along with Anna Martinez, I hope I pronounced that right, are co-chairs of the monitoring group. And despite the COVID-19 pandemic, the monitoring group has done quite a bit of work in this period, including putting out, I believe, the final principles or recommendations for the restructuring. Can you talk about kind of what's behind the recommendations and why the group believes that this will, help and further bolster audit quality?
Yeah, sure. No, it's funny you said that, Julie, because I was really pleased that all the monitoring group members continued to focus on COVID-19. It shows the importance of the work that this work that had been going, for those who don't follow it, this work had been going on for 5, 6, 7 years. And basically, in simple terms, it's trying to figure out the right structure for the IAASB, the PIOB, who would be kind of akin to like the FAF here in the US, and then the monitoring group up top. And the monitoring group is 7 different, very large organizations. So we represent, Anna and I represent IASCO. And then there's IFIAR, there's Financial Stability Board, there's European Commission, there's World Bank, FSB, I may have said them. But anyway, there's many different organizations. And you have to get unanimous approval. So it's not like 4-3, it's 7-0. So you need everybody kind of on board. And so that inherently kind of forces it to be kind of a challenging process when you get so many different constituents. But by setting up a structure and getting everybody to agree to that structure that people have been working very hard on, and as you pointed out, Julie, the recommendations are on the IASCO website. They're probably on other people's websites. People can pull them down. But they're highly substantive, and I think they'll certainly enhance audit quality. Just to give you a flavor, they have now clarification on the number of audit practitioners that should be on the IAASB board. There's enough balance where you're getting that expertise, but you're also getting the multidisciplinary perspectives of other people on the board. And so, kind of, we thought about what the right balance is. All of it is grounded in a public interest framework of who are we responsible, what are financial statements responsible for, who should they be grounded to, much like I was referring to our SEC mission. There will be clear responsibilities of, okay, here's what the PIOB is doing, here's what the IAASB is doing, here's what IASBA is doing. So there's not duplication, there's not confusion, there'll be more synergies versus, at the end, somebody had a different view, for example, and that could be confusing. There'll be open calls for nominations at the different levels to get kind of the right mix of talent, people, and so forth. And so, and then there's other, topics that certainly are addressed in there that I'd encourage you to kind of look at. And so it's something we're really excited. Our chairman certainly is very internationally focused, spends a lot of time on IASCO. Certainly the time and commitment that OCA has had a chance to put into this for the broader good is something we're happy with. And, at first when there was COVID-19, it kind of dawned on me, when Anna and I send out an invite, are people going to accept? Right, to keep having these meetings internally, because rightfully so, around the world, there's a lot of things going on. But it does say something to the importance, I think, to the momentum that it didn't miss a beat. And for that, we are sincerely grateful. And so very happy to have moved that. There are lots of work still to do, but I won't talk about that. But at least we're moving it in a positive direction, at least from our lens.
That's great. Thanks for that. Jim, I'm going to turn back to you. Obviously, the pandemic has created some very unique accounting and auditing issues, which we're going to talk about in just a minute in more detail. But can you just talk about the profession's approach to dealing with these issues? And in particular, I have a feeling the audience would be interested to know, is this like each firm approaches it individually? Is there an opportunity to share information, keeping in mind antitrust concerns? Just talk a little bit about the process.
Absolutely. Well, you're right. It most certainly has been a challenge. And I think before I get into some of the accounting auditing challenges, I think one of the things that we all dealt with and are continuing to deal with is the people impact of working remotely. So we've all been I think everybody on this call has been very attentive to the personal demands on all of our people and adjusting to a remote environment. And in Duane, some of the relief that you mentioned that the PCAOB had in the inspection cycle allowed our people to get used to working in a remote environment and do the work they needed to do in those early days. So that was very helpful, something that we continue to focus on. But also with respect to the environment and the accounting and auditing, I would say acknowledging this fact that it has been a challenge and then making adjustments to be responsive to that new environment that we're operating in. I think that's an important part of what we do as a profession every year, and particularly this year. I would tell you that each firm, I think, primarily is developing its own responses to this environment using their own methodology. But we have been communicative as a profession. And in fact, Julie, really using the vehicle of the Center for Audit Quality and our meetings there of the Professional Practice Executive Committee gives an opportunity for the firms to talk about the issues of the profession and understanding those issues. So while it's each of the firms are going to develop their responses that are customized to their firm, I think we have been able to hear the views of some of the other firms as we work through that process. And I'd say that in terms of trying to work through that as a firm, we've tried to be very proactive with addressing the issues that audit teams are going to face during the execution of an audit kind of ratably throughout the year. We're trying to think about those issues they may come upon before they hit them and before they become an impediment to the flow of the audit engagement. So we've been working on that very hard, and that's something that obviously continues. But we've even said, okay, early on, a few months ago, we said, what if we are forced to execute an entire audit cycle in a remote environment? What if this environment stretches us out? And so I think at the time we started going down that path, we may not have actually believed that would come to fruition, but I feel like now building that database of what we refer to as FAQs and our own database of, okay, if you have this issue, here's what to do. So we've kind of already building that as we go through. Some of those examples, I was thinking of some examples of some of those challenges. There are so many, but from an accounting perspective, clearly prospective financial information is very difficult for the companies to be able to put together in this environment and knowing what the future is going to look like. Going concern analysis, most certainly, we're going to talk about that, I think, in a little bit. In addition, any impairment tests or recoverability analyses, including even deferred tax assets, and needing to look out into the future becomes very difficult in an environment like this. And then from an auditing perspective, inventory counts, we've talked about that quite a bit. I think that's one of those issues where the profession has discussed that together. And then really just obtaining the appropriate audit evidence. And how do you make sure you continue to get that right amount of audit evidence? Duane, I think you just mentioned that, and the appropriate supervision over that work. So those are some of the things that we've been addressing for our teams. And I believe the whole profession has been coming at it that same way. And then last thing I would mention is we've really messaged a focus on a high level of professional skepticism during this environment. This is a difficult environment. I think teams need to be focused on their fraud risk factors, and we've had that discussion internally, and just the higher inherent risks, both in errors as well as in fraud. So teams need to be very diligent and very sharp, and we've been communicating that on a regular basis.
Great. Thanks, Jim. That's very, very helpful. Christine, I'm going to flip to you for just a minute. So Jim talked about, having the profession go to the remote environment and the challenges and kind of the success stories I think we've seen since that happened. Can you talk a little bit about technology and how the firm's investments in technology may have kind of eased that transition, going to a remote environment, but also maintaining audit quality throughout this 5 months that we've been in and for the rest of the year?
Sure. And first, to follow on, by the way, with what Jim said about coordination among the firms, it is very high. Jim and I have a very similar role at our two respective firms, and Jim is now on my speed dial, which before I talked to him frequently, but he wasn't on my speed dial so much. So lots of coordination is happening throughout the profession. And I'll address the technology point, but it kind of starts with what, Jim, you were talking about with our transition to a remote workforce. And I do think it's been highly successful and effective, but I'll say it's not optimal. Our goal is absolutely to get back to our clients and to get back to working with our teams live as soon as we can safely do that and as soon as it's safe for our clients to do that. However, as you say, our investment in technology and innovation has really been what's enabled our successful transition. I've thought oftentimes myself, what if this was 10 years ago or 20 years ago? Could you imagine how catastrophic this would have been, even more catastrophic than it has been now? But for several years, certainly our clients have been moving away from manual records to digitized records, and that's been critical in this environment. We've invested substantially in remote technology devices, whether that's our laptops and our cell phones, but with very, very heavy security with MFA, multi-factor authentication, and other enterprise-wide security programs that allow us, to access our clients' data as safely as possible remotely. We have had significant investments in communication and teaming platforms that allow real-time knowledge sharing and video conferencing. The video conferencing has been crucial for walkthroughs and like key management conversations as well. So that's been very helpful. We've invested in a cloud-based technology, which I mentioned is that's our interfacing with our clients and accessing requested documents. And this is through a secure online portal where clients upload their requested information and then our teams have access, and there's a two-way dialogue back and forth between the clients and our teams. We have analytics applications, and that allows us to do significant data analytics on our clients' data. And really, just most importantly, we have a cloud-based global audit platform, and that just brings together all these advanced technologies and all of these analytic capabilities. It's scalable for our clients, so meaning for clients of all sizes and for clients across industries.
That's really helpful, Christine. Duane, I'm going to turn to you for just a minute to talk about how the PCAOB has, responded and how you're operating in this remote environment.
Well, similar to all the comments made so far, I mean, our most immediate focus at the onset was to make sure we were protecting the health and well-being of our people. So, in mid-March, like everyone else, we ceased all travel and we started a mandatory work from home approach that we have extended through at least year end. So to Jim's point, we didn't know how long it was going to last. We still don't exactly know, but it's lasting. And certainly from my view, the transition to operating remotely has been surprisingly smooth given the circumstances. And to Christine's point, it's really been enabled by technologies which have allowed us to keep connected and keep functioning. And so from a programmatic perspective, we've been able to execute our activities remotely without any major disruptions. We continue on with our standard setting agenda projects. For instance, the QC project, we're moving forward. We're still performing our assessment of the initial CAMS implementation, so that's moving forward as examples. Our enforcement activities, investigations, disciplinary actions continue moving forward. And we're performing all of our inspections remotely. And of course, that, similar to Christine's points about having to have those technological interfaces that are secure between issuers and the auditor, we likewise have interfaces with the firms in terms of doing our inspections. So that has, again, been enabled by technology. And, the remote inspections are performing well. I think the firms understand the statutory inspection obligations under SOX that we all operate under. And, the firms have been very flexible and accommodating to make sure we're all, fulfilling that mandatory accountability. There are some things I thought I would highlight. Just a couple scoping adjustments that we are making to our 2020 inspections of the six largest U.S. firms. First, we're going to be selecting a greater number of audits with 6/30/2020 year ends. Typically, we wouldn't expect 6/30 year ends till the next cycle, which would be in 2021 in this case. But we want to get in there a little bit earlier to see what some of the issues are. Second, for the first time, we're also reviewing a sampling of first and second quarter interim review work focusing on areas that most likely could be impacted by COVID. And the whole objective here, as we've shared with the firms, is to really give us the opportunity to gain more timely insight into how auditors are navigating through this new terrain. And that will give us the opportunity to provide more timely feedback through guidance or additional communications. And that might be areas where we think improvements are needed, or it could be where we identify good practices that firms are using that we want to share more broadly. And all of that is aligned with things we've talked about in the past about our new strategic focus on being more proactive and more preventative in our regulatory oversight.
And that's a great example of pivoting to, what the real-time situation you're seeing on the ground as well, and getting the input back to the firm. So it's a great example. Now we're going to dive in a little bit to some specific accounting and auditing areas. And Christine and Jim are going to kind of rely on you all for these questions. Let's start with Christine. Certainly COVID has introduced a lot of uncertainty that, particularly when it comes to valuation and impairment issues. You mentioned that as part of some of the disclosures companies were talking about. Can you describe some of the challenges that you've observed with entities preparing future cash flow projections? And how has the SEC statements around, respecting reasonable judgments been helpful or impacted those challenges?
Sure. So that's really probably the most challenging area, particularly in Q1 that I heard about from our clients, was forecasting and all the significant judgments that go into the forecasting. So that's the most challenging areas. These significant judgments, you have to think about the novelty of the pandemic and how it's impacting your business and consumer demand and all the government actions from the CARES Act and the other government lawmaking. You have to think about subsequent events and how that impacts your judgments. You have to think about market capitalization in periods of volatility. You have to think about, as you develop your estimates, the really what I call the limited usefulness of historical information. So usually you'd think the historical information is going to predict the future, not as much in this particular environment. You think about difficulty translating the macroeconomic forecasts to specific expectations for that business, because the traditional relationships in those, they just may no longer hold, again, like they have in the past. And companies are really grappling with external sources used in projections that had a wide range of possible forecasts and outcomes. So is it the W-shaped recovery or the V or the U? You saw a lot of different forecasting models that were out there. And I think what this really means too for companies is that they're going to very much frequently have to revisit the forecast. And so that's going to mean, at least on a quarterly basis for many, many companies. From an audit perspective, as we approach this, Jim and Duane really hit on the key items that we're thinking about, highlighting professional skepticism and judgment and objectivity. Documentation, audit evidence, have to consider all the evidence, not just positive, but the negative, the contradictory evidence, and all the other themes that you talked about. So just pivoting to the SEC statements around respecting reasonable judgments, I would say thank you, Sagar. That was very helpful. That was very well received and very welcome by the profession and, of course, public companies. And the SEC statement, just again, my background, I think the actual words were, we would not expect to second guess good faith attempts to provide appropriately framed forward-looking information. And in addition, the SEC has been reminding companies that they respect well-reasoned judgment while, and this is important, while highlighting that companies need to have understandable and useful disclosure around key judgments and estimates. And also that those estimates and judgments need to be consistent with the company's facts and circumstances. So I'm really, and we as a firm, really trying to focus on that with our clients, the importance of how transparent these disclosures need to be in this environment. And early warning disclosures are critical. when you think about impairments and other early warning disclosures and forward-looking information, I would say in our analysis of the SEC comment letters issued to date by CorpFin, which is still relatively in their infancy, because there's a lag, of course, between the time you file a periodic report and the SEC issues a comment letter, but we have seen a focus on those early warning disclosures in the CorpFin letters.
That's great. And speaking of early warnings, Jim, I want to turn to you. Let's talk about how the pandemic has impacted the preparation and auditing of going concern assessments.
Absolutely, Julie. I would say, first of all, this is clearly an exercise that's more difficult on the management teams of registrants too. So not just on the auditing, but on preparing those initial calculations. And this too requires significant forecasting, as Christine was just referring to. There's some of the very similar risks that you're looking at, just as if you were doing an impairment analysis, any other prospective financial information being involved. And there's so much uncertainty when you're looking out, even within a relatively short period of time, 12 to 15 months, the future level of revenues, how that might translate into a future level of profitability. It could be supply chain interruptions as part of this process. Price concessions may be something that's being considered within the company to get through this. Collectability of customer receivables, and then of course overall level of liquidity. And these calculations can be extraordinarily complex because many of these factors, and I've only named a few, are interrelated as well. I would say that it's important that companies and audit teams, when they're faced with a complex calculation like this, involve others in the process. And that's something that we stress in our firm, is to involve others beyond just the audit team, and as well as that's valuation professionals, as well as members of professional practice, to help work through that and make sure we're getting to the right answer. Early on, there were questions that Christine mentioned early, which was we had client personnel asking, what is the predominant view that we should use? What is the one that's the approved view? And so once again, the statement that the SEC issued was helpful, just in terms of saying, you need to make that view yourself. One of the things that we have stressed is that while that's an exercise of the finance department usually that is going in and calculating a going concern assessment, it's important to make sure that the key most assumptions that are built into that model are consistent with the point of view that senior management and the board also has. And so one of the audit steps, of course, is to make sure that those views are consistent. That's extremely important as well. But all of that said, is still a very difficult process. And I do think that we will see more of that activity as the rest of the year unfolds. That's something that we're prepared for to see.
Great. Thanks, Jim. Just for the panelists, I think we have some questions coming in, so let's maybe take another 5 minutes or so and have our discussion, and then we'll turn to some questions. Jim, I'm going to follow on to you which is all the stuff that we talked about with accounting and auditing issues. How, if at all, do you see these changes impacting auditor reporting going into the annual reports?
Well, I do think that there's been a heightened focus on the critical audit matters, and that's still a relatively new for the profession, of course, and registrants. One thing that is being considered, I think, amongst the profession, and there may be different points of view, is whether or not there should be what I would refer to as a COVID CAM, which would be a CAM that is specifically maybe making the reader aware of just the inherent risks and complexities that the COVID environment has created. That's really not an approach that we are planning to use, but I think there is a possibility that we may see something like that. I think our approach is going to be looking at specific financial reporting areas where the COVID-19 environment has manifested itself and has made that more subjective or more complex. So I think you would see in our CAMs where there would be a discussion, for example, in the significant estimates, where there would be a reference to the complexity added because of the COVID environment and the uncertainty about the future. similar to going concern that we were just talking about, as well as impairment. So we expect to see more language about COVID in those specific financial reporting areas as we go forward.
That's very helpful. Thank you. I have two more questions, one for Christine and one for Sagar, and then we'll turn to some questions from the audience. Christine, keeping on the theme of specific accounting and auditing issues, non-GAAP measures, to date, or at least in the first quarter, we didn't see a lot of non-GAAP measures impacted by COVID. We're starting to see some in the second quarter. Can you talk a little bit about kind of what you're seeing in this respect? And, not to steal Sagar's thunder, but remind everyone, what the SEC has said is permissible and not permissible when it comes to non-GAAP measures.
Okay, and I'll try and do all that in a very few minutes, since I know we're running low on time here. First of all, I would just say there's not new rules on non-GAAP measures for COVID. It's the SEC's current existing disclosure framework and the current Reg SK rules on non-GAAP measures. And so what generally would be prohibited under the current rules are if you have a measure that's inconsistent between periods without appropriate disclosure of the change, or you exclude cash recurring costs. And so an example in the COVID environment is if you're excluding normal comp, so normal compensation for employees at stores or locations that have limited operations. You should still include the normal cash comp in the adjustment. And you should not exclude non-recurring expenses, but not exclude non-recurring gains. That's what we call in accounting cherry picking, no cherry picking. But the most important concept that applies here as far as prohibitions is there's a prohibition on what's called individually tailored accounting principles. Okay, and that's kind of a mouthful, but it really mostly deals with revenue adjustments. It can be other types of adjustments, but largely revenue adjustments. And the example in the rules are, let's say you are upfront revenue recognition in your non-GAAP measure, but you're deferring it under GAAP. And so applying that to COVID, it might be if you add back lost revenue from your closed stores because you didn't have any revenue. So adding back lost revenue, may not be acceptable. And if you're thinking about COVID adjustments, they should be directly related to COVID. They should be incremental to normal operations. They should be objectively quantifiable. And you mentioned, Julie, you're right that we did not observe a lot of companies making adjustments in Q1, nor did we observe that in Q2. We did take a look at that. We didn't see a lot. I mean, what we predominantly more saw, and I think this is a great practice, is we saw good quantification of the impact of COVID on the GAAP measure and the non-GAAP. So narrative, but they didn't adjust the non-GAAP. They didn't do the math. Sometimes when you do the math, that's where you get in trouble if they're prohibited adjustments. Some of the permissible adjustments we saw were adjusting for impairments that were COVID related. You can adjust for impairments generally in a non-GAAP measure. It was adjusting for severance and restructuring charges related to COVID. That's permissible. You can adjust for some discrete tax impacts, and you can adjust for what's called direct and incremental costs. So that might be excess cleaning costs. That would be direct and incremental. So that's a quick summarization of a complicated area.
Absolutely, thank you. Sagar, I'm going to come to you for the final question. Can you tell us if the SEC staff, are you still primarily focused on COVID-19 matters? And if so, kind of what areas? Or are you now kind of moving back to more business as usual kind of discussions? So any light you could shed on that would be interesting.
Sure. I think it's both. And they kind of now weave in a little bit because this has gone on for, a number of months. And so, but no, certainly from a non-COVID, we are still getting lots of accounting consultations that have nothing to do with COVID that would have come in otherwise. Certainly we're getting accounting consultations on COVID as well, right? So that's an example. We continue to do auditor independence consultations. We continue to be really active internationally on things that would be non-COVID, monitoring group we talked about earlier, monitoring board responsibilities, trustee, turnover, all of those things, would have happened. All of those things are really, really important to what we're trying to do. The FASB, obviously a big part of what we do is oversee the FASB standard setting process. things are moving forward at the FASB, that are in COVID that we're working with. And then obviously, I think Duane has outlined kind of the different things the PCAOB is doing, COVID and non-COVID. And so obviously, as our work with the PCAOB, we impact that. And so, honestly, I think it's just become kind of the part of the fabric of what we're working on and what our professionals work on. And so I don't even think we put them necessarily into, bucket A or bucket B. It's just, it comes in and then, we just handle it and kind of work through it and deal with it. But certainly a lot of non-COVID stuff that we're doing. And I tried to walk through that. And then I think the first 55 minutes, we've kind of talked about the COVID thing. So certainly all those things are really, really important for a lot of reasons.
Yeah, that's great.
Yeah.
So we have a couple questions that have come in. The first one I'm going to direct to Christine and Jim. The second one, I think I'm going to open it up for all of you. So Christine and Jim, here's the question. Post-pandemic, do firms plan to continue some degree of virtual auditing? Are there any benefits of auditing virtually?
Jim, do you want to go first or up to you?
I'm fine too. I was going to offer you the same thing.
Whatever you prefer. But
why don't you go first and I'll follow along behind.
Okay. Julie, we haven't really don't have a formulated plan for that yet. I'm speaking honestly. Right now we're just focusing on what we call execution of work, what we should do virtual versus what we should do live. As I mentioned earlier, this is not optimal for us. We want to be back at our client sites. That's optimal for us. That's optimal for our teams, even from a learning perspective, on the job experience. It's much better when you're doing it together in a room. Yes, we have Zoom rooms set up like for engagement teams. It's open all day long. So they're like in a room. It's still, not perfect. It's definitely workable, but our goal is to get back to our client site. Might we use use virtually more? Yeah, I mean, it's possible that we could, but again, not our goal.
I would echo that. I have the same point of view. Most certainly, our primary approach to auditing is going to be there on site at a client's operations and with their management team, interacting with them personally. However, I would acknowledge that we have probably of necessity learn some things about our ability to be able to achieve certain goals in a remote environment, that it's possible that we know that exists now, that capability exists. So it may be some items, but I would agree with Christine. Our primary focus is still going to be on site with the client's personnel.
That's great, thanks. In the final 2 minutes that we have, like I said, I'll open this up to the panel. Given we have a lot of academics who are teaching the future generations of accountants and auditors, what recommendations do you have for incorporating a lot of the themes we've talked about with COVID and the pandemic, the skill sets for the auditors that we need? What recommendations do you have for incorporating those types of skill sets into auditing courses going forward? Obviously, skepticism seems to be coming up left and right here, so teaching that. But I guess I'll just open it up for everybody to provide just a couple brief remarks on that. If anyone who wants to start.
I can take a stab at it, Julie. I think a lot of what we've talked about is really, in some ways, it's nuts and bolts blocking, tackling, auditing. I mean, it is different circumstances than we usually face. And there's a lot more uncertainty, for instance, in the projections of financial information that was referenced earlier. But in terms of, the approach you're going to take to audit it, and Christine and, Jim certainly weigh in here, but to me, I think it maybe reinforces what's already in the textbooks is maybe how I would look at it, but I'd be curious on the others' views.
Yeah, I agree with that, Duane. I think, clearly innovation and technology skills for what they're teaching as it relates to auditing is key. So data analytics and the other innovative technologies that I talked about become very key. That would happen irrespective to me of a remote versus a live workforce. So documentation, the evidence, professional skepticism, objectivity. Another reason why we want to get back to our clients. You think about heightened fraud risk. It is much better to be face-to-face and watch somebody's body reactions. And you can kind of do that on Zoom, but still not as well as you can face-to-face. So really having skills to be able to do that type of stuff is key.
Sagar?
Yeah, I would just, sure. I would just, well, I would agree with what the other panelists have said. And certainly the academic community is a critical community. So thank you for your education. And then also thank you for being part of the process. We have an academic fellow, a longstanding program, engaged with academics would certainly, well, I know it's not the question, would certainly continue to encourage academics to participate in the financial reporting process. It's a very, very important constituent that we very much value and have had those discussions. You know, like I said, like as the other panelists mentioned, I agree with all those. I think the other thing it shows is kind of the strength of the profession broadly is it seems like periodically there comes some really hard, challenging times, right? And so like I remember it was not nearly like COVID-19, but I remember when tax reform got signed, December 22nd, if I remember right, a very challenging time. I could be wrong, but something around there. A very challenging time, you know, biggest rewriting of the tax code, and the profession came through, got really good information to investors, you know, and it's kind of, if you look at the history of the profession, it's stepped up, and so back in Q1 and Q2 when companies were putting information out there, you could literally almost just feel the markets calming. Right. I mean, Jay has said countless times that people thirst for information. Right. So it shows the absolute relevance and highly significance of the profession. So, you know, obviously, I would hope that somebody who is in that class feels really passionate about it. But I think as a teacher, that'd be a good venue of like, look, this is really, really fascinating stuff. And you can play a really, really massive part in our own way of kind of this pandemic that's hitting or you know, a challenge and so forth. So that's the only thing I'd add on. But other than that, I just echo what others have shared.
Sagar, that's really well said. I think the relevance of this profession is so significant. And, you know, a practitioner makes a very big difference early on in their career. And I think that's a great message to be able to send to students coming along.
Well, great. We're out of time. Christine, Jim, Duane, and Sagar, thank you so much for taking time out of your really busy schedules to be with us. Thank you all for participating.
Thank you for having us.
Thank you.
Have a great day, everyone. Bye-bye.
You too. Bye-bye.